quite a big shock that we saw the Federal Reserve deciding to hiking the discount rate to 0.75% from 0.5%. Many were very shocked at this move, and we are seeing Asia under pressure today. Many say we will also see the US coming under pressure later on today.
Almost certainly. It was quite a shock in terms of this is what we expected them to do first, because remember when they started cutting rates, the discount rate is what they cut first. It was an unusual move back then, but now we probably expect them to do a similar thing this time around. With regards to the timing, yes, it was a bit of a shock. No one was expecting it to come out right now. But ahead of CPI data out of the US today, maybe it might be a bit of an indication that it might be a bit higher than expected.
So you are expecting a higher CPI number out of the US today. Do you think inflation will become an issue?
There's a bit of debate at that at the moment. There's no demand, no huge demand out there right now for goods and services from the US. But China has been picking up. It has been demanding a lot of stuff. So that might be feeding through in terms of oil prices, etc. I don't know how the US economy is going to be dealing with the inflation coming through. But I do see it maybe it's a possible indicator that if they are hiking the discount rate, that they could be seeing, inflation fears coming into the market again.
The dollar gaining ground on the back of all of this, so quite interesting. We have seen quite massive moves on the currency front, especially regarding the euro dollar. Do you think the dollar's gains will be sustained going forward?
Yes, I think that even though the Fed might be looking to raise interest rates in the near or the medium term, etc., the euro is probably going to be, or the eurozone is probably going to be a lot behind that because of the troubles from Greece, from Spain, etc., Italy as well. So you have a situation right now that the forecast at the moment is that the US is going to be raising rates before the European Union does, and that's probably going to be stronger for the dollar and weaker for the euro.
Just looking at the commodity prices which are selling off, no surprise there because we are seeing a higher dollar price at this stage. Do you think that commodity prices have basically hit the top for now? It's just so much uncertainty in the market. Do you think there's more move for a rise or a hike in the commodity prices from these levels?
I mean, commodity prices is actually driven by at the moment by China. But China is a much smaller economy than the US. So the US is basically looking to raise interest rates in the medium term. Like I said, you are going to see commodity prices come down. China has been responsible for growth, but you can't have the real strong return of demand for commodity prices that you would see before the peak without having the US, the world's largest economy, coming back into play. Industrial
Policy Action Plan announced yesterday, and quite an interesting one at that. Big focus on manufacturing, moving South Africa from a consumption-driven economy to a productive one, more into manufacturing, and also expected to get 2.47 million jobs from this Industrial Action Plan. Do you think that we're going to be seeing all of this that we heard yesterday?
One of the strange things when I did first time economics courses was I realized that the Asian markets, we were always told, free markets are good for the economy, etc. You look at the Asian markets, they weren't free. I mean, you look at Korea, you look at Japan, they all had very strong industrial policies. I mean, for instance, when Honda wanted to start making cars, they were told by the government, no, you don't make cars, you make particularly other parts here. They actually had that kind of control where they told particular companies what they could or could not make, and they did quite well. It all depends on how the government actually exercises its abilities, how it actually handles this plan. But industrial policies have been successful throughout the world, especially in Asia, and there's no reason to suspect why we could not be successful in South Africa as well.
Well, some say that it's not only about the industrial policy regarding manufacturing or increasing capacity, but it's also about labor laws, and that will then assist any kind of industrial policy that is at play. And you alluded to Asia, where we see what kind of labor laws are in Asia. Obviously very stringent, they're very aggressive. Clearly it's something we shouldn't be adopting in South Africa, but do you think we should be also looking at different labor laws in the country?
Well, if you look at a place like, say, for instance, Japan, I mean, they have quite strong labor laws. It's very hard for you to lose your job in Japan. So people always say, a strict labor law may mean that there's more likely to have lower growth, etc. Yeah, it does put a hamper on growth, but it doesn't mean that you can't have strong growth coming through. So, I mean, if you look at some of the Asian markets out there, they had strong industrial policy, they had strict labor policies as well, but they managed to grow themselves quite strongly, quite fast, and managed to lift their populations out of poverty. Places like Korea, places like Japan, like I mentioned earlier. If those are our models, yes. However, the thing that they have different there that's different from here is that they have a much stronger union between business and unions, in which we have the confrontational kind of set up in South Africa.
A lot to digest for investors this week. We had the budget, the Industrial Policy Action Plan. Apart from that, now the Fed deciding to hike interest rates. A lot of noise in the market right now. Viv, heading into the weekend, what would you be doing with your cash? Would you be sitting and waiting for the noise to subside and then heading into the markets, or is it a good time to buy, given that we're just seeing so many earnings coming through on the local front?
I would not be buying at the moment, definitely not. I mean, after the rally we had in the last basically 5 days, it was well over 1,000 points. you would expect the market to take a bit of a breather from that, and where I would expect a bit of a pullback today, maybe going into the start of next week as well. And that's without any news coming out. If there is any surprise news coming out, for instance, I know that they've pushed back the deadline for the Greek news until the middle of March, but the middle of March is only 3 weeks away, and there could be any kind of news in from now till then. And if that happens, you're going to have a pullback in the market again. And also, yes, so far we've had some positive surprises coming through in terms of earnings. However, I don't think they've been the kind of earnings that are going to justify like really strong share prices into the future. A lot of them has been on cost cutting, a lot of them has disappointed revenue, and that's kind of the stuff that I'm looking at right now.
You said we had a few positive surprises on the earnings front. Give us an indication on some companies that stuck out for you, Viv.
Well, if you're looking at in the local market, some of the commodity prices came in better than, commodity stocks came in better than expected. That helped boost the market. But as with everything, there's always been a bit of caveat for every result that comes out. For instance, Walmart beat on revenue yesterday, but they had different sectors that were weaker, etc. These have been the issues that I've been looking at. Is the fact that yes, earnings have been coming through stronger than expected, but they aren't being they are giving the kind of indications that you're going to see that this is going to be strong, sustainable growth into the future. A lot of the stuff has been basically inventory restocking effectively, bounces because we had such a bad year last year. This isn't indicating that current stock prices are probably going to be justified going into the future, not indicating that growth rates are going to be justified going into the future.